Clara Hermit, and this is Mould on Markets, our regular look at the financial markets with Investment Director Russ Mould. Russ, Happy New Year, how are you?
Happy New Year to you, Clara. Very well, how are you?
I'm not too
bad
bad
at all.
at all.
But apart from that, you're battling on.
Yeah, got a little bit of a cold.
It won't last, you'll beat it.
It is 2015. What is it that advisors and their clients should be thinking about?
Well, we're off to a really quick start on the macro side. We've got inflation figures from the UK, inflation data from America, and also some industrial and sentiment indicators stateside, all of which are likely to have a bearing on central bank policy, both sides of the pond. We've got the Federal Reserve's first policy announcement of the year coming up on the 28th of January.
Yeah, so the Bank of England left interest rates and QE unchanged in its first meeting on the 8th.
Yeah.
To what degree is this going to be influenced by the inflation numbers?
Well, I'm sure they're probably given a bit of a nudge on what the inflation figures were going to be anyway. They're not due out until Tuesday the 13th, but I'm sure Governor Carney had a pretty good idea what was coming out there. The chart behind us shows inflation in the UK as measured by the Consumer Price Index, or CPI, but the retail and producer price indices, RPI and PPI, they all show a similar trend, basically, in a top corner all the way down to the bottom. Now, when it comes to the UK inflation numbers for December, they'll be measured against the prior month, when the figures were interesting reading. CPI at 1%, RPI at 2%, house price index up 10.4%. Now, since then, we've obviously had this big drop in the oil price, further weakness in commodity prices, also some anecdotal evidence that housing's, just coming off the top a little bit. So I think most analysts are going to be expecting lower numbers for December relative to November. In sum, inflation's muted, as the chart here shows, and the Bank of England's 2% target for CPI looks a long way away. Now, that might mean that Governor Carney's not exactly in a big rush to raise interest rates. The market's busily pushing out its forecast for the first increase to early 2016 from the fourth quarter of this year. And even if Carney's talking tough, I'd be pretty surprised if he was to act in a hurry.
So what are the big numbers that are due out on the other side of the pond in the week ahead?
Yeah, I mean, you've got three things to watch here. First of all, we'll be getting some colour on the US economy, if you'll pardon the pun, from the beige book that's coming out. That's the sort of latest collection of anecdotal evidence from the local 12 Federal Reserve banks on economic conditions. Coming on from that, you've then got, on the 15th, the Empire State Manufacturing Index, due a measure of business confidence in New York State, and we'll be seeing if that strikes back after a couple of weak numbers. And also on the 16th, we've got American inflation figures. Now, the biggie, I think, will probably be the Empire State reading, interestingly enough, probably quite topically that Star Wars 7's coming out. Now, November's score of minus 3.6 was the worst since January 2013. The sort of numbers you actually see in a recession, and the late year weakness shown by this indicator in the chart here doesn't really fit with the bumper Q2 and Q3 GDP growth forecast that we've got. Now, that's just one data point of many, but the Q4 figures overall have been a bit spotty, been a bit patchy, and it's hard to see why the Federal Reserve is going to be any more aggressive, in my opinion at least, with interest rates than, say, the Bank of England.
Okay, thank you, Russ.
My pleasure.
Thanks for joining us, and we'll see you next time. Goodbye.